Hi, Kelly. This would be a hold for me. I think some of the things that Christina mentioned were very valid, especially when you look at the auto sector. And I think one thing, if you look deeper into the auto sector, out to the consumer, we're seeing some cracks in demand, right? Delinquencies are starting to pop up, and that's going to be an issue for them as they obviously have a large part of their revenue share towards automotive. And of course, we still have supply chain issues. We're still in that raising rate environment, which has obviously hampered a lot of growth stocks. But the rumor about the Samsung deal was something that's helped them rebound a little bit over the past month or so. So I think there's still growth issues near term, but I would be holding on because I think you'll get through that in 2023, 2024.
All right, we'll move along then, Christina. Thank you to PulteGroup, the home builder, down 20% this year as mortgage rates double, but shares are up 13% in July alone, kind of a similar trading story as NXPI. The builders continue to report strong demand and a slowly clearing backlog. Diana Olick has the story for us. Diana?
Well, Kelly, as you obviously know, because we talk about it all the time, June was the real turnaround, that big U-turn in the red-hot housing market. So I'm looking less at the top and bottom line numbers because they're likely to be very strong from Pulte. More, I want to see the cancellation rate, which we saw D.R. Horton last week report really jumped up. And I'm also interested in looking at any guidance that might change going forward because this is the real change in the market. Anything on pricing as well, because mortgage rates did pop up pretty significantly in June after rising steadily from January, again, twice that they were in January. And also we saw builder sentiment really plunge historically in July. So that's what we're looking for going forward on this stuff, because for the builders, it's all going to be about that outlook ahead, especially when we look at potential supply chain easing. We're starting to hear murmurs of that. Does that mean that they're able to build these homes faster and have much bigger backlog if they're not able to sell them now? We get sales tomorrow as well, so that'll play into that. But again, for Pulte, it's really what the outlook is ahead rather than what's behind. Kelly?
4 times forward PE. Delano, I've been drooling over these home builder PEs, but I noticed that Carter Worth this morning, who had been bullish as a pair trade, I think, on the builders for the past several weeks, is now saying maybe take your money and run. What do you say?
Yeah, sorry about that. I would agree with Carter on that. I think obviously the value is pretty strong. You have incredible low Ps, but I think it's for a reason as the picture is getting less rosy if you go out. We just mentioned the rates going up about almost 3%. That's going to hit people that are potentially using cash flow, using real estate as a cash flow option as well. So if you look at it in the near term, a couple of things pop out. Affordability is obviously going the wrong direction for everyone out there. There's more cracks in the housing market as you take a negative turn on housing starts. So, looking at the cancellation rate, I think is actually really, really important because we're getting to the peak has already happened, and I think we're going the opposite direction in these home builders. And I think the market's priced a lot of that in for a good reason.
All right, Diana, thank you. Our Diana Olick. Let's move along to McDonald's now. The Dow component down about 6% this year as they navigate the labor shortage, higher food costs, unionization efforts. All their franchisees were unhappy last week. Kate Rogers has the story. There has not been a lot of positive headlines for McDonald's, Kate.
Well, we'll see what happens tomorrow morning. But so far, analysts are expecting EPS of $2.47, Kelly, on revenues of $5.8 billion. Same-store sales projected to increase 6.2% overall, 2.8% here in the U.S. And remember, the U.S. number is always key as we're watching to see how consumers are reacting to gas prices and inflation in general, and if they've pulled back at all. Last quarter, McDonald's executives did mention some customers kind of looking for lower price point items, but said that they were still ordering via delivery, which is much more expensive than going through the drive-thru or in store. Grocery inflation, remember, continues to outpace restaurant inflation, which is beneficial to companies like McDonald's in a recession. FX headwinds also will be in focus. The company already warned there would be a drag of about 8 to 10 cents on EPS. Some analysts at Cowen and BTIG are now projecting that could be even higher. The Russian business has been sold off, so an update on that will be key as well. And as you mentioned, finally, any mention of franchisee tensions over changes to lease terms and the restaurant grading systems that we've been reporting on will also be of note on that analyst call.
All right, Delano, you've been kind of neutral on NXP, bearish on Pulte or the builders, but on McDonald's, it sounds like you're a little bit more bullish. Is that right?
Yes, definitely one that we hold. They're definitely still a hold or buy if people are looking for opportunities in a stock that's been, you can't really get close to recession-proof, but you're getting close to the recession-proof there. As just mentioned, when you're talking about predictable revenues, a lot of their business is obviously the franchisee model, which is predictable for Wall Street to predict. Cash flow, they've been doing great when it comes to the margin and cash flow generation, which has obviously been an ability for them to, one, buy back stock and also increase their dividend payout ratio, of course, as well. So I think for investors, investors, if you look at the 5-10-year chart of McDonald's, outside of the height of COVID, it's been a steady uptrend for investors to get a steady boost in capital appreciation and obviously get dividend cash flow. And so I think this is a great stock for people to be in if they're looking for that kind of predictable revenues and strong capital appreciation, Kelly.
I'm going to leave it there, but Delano, we're just kind of doing a straw poll here. Are you overall nervous into this this week, this earnings season, this market, like everybody else?
I would say, yeah. I think, if we don't get, solid numbers on the back of, easier projections, then we're going to, potentially be in for another downtrend.
Yeah.
We saw decent numbers last week from some of the banks, and I think that helped pull us forward for the market. But it's definitely still shaky grounds, Kelly.
All right. Delano, thanks for your time today. Delano Saporio. Kate Rogers, thank you for giving us a preview of McDonald's as well.